The hype around Bitcoin in 2024 is off the charts. A pro-crypto president, clearer regulations, and sky-high price predictions. It all sounds like a dream, right? But before you start planning your Lambo purchase, let's hit pause. What if the biggest year for Bitcoin also brings its biggest challenges? Hidden risks could shake the market in ways no one expects. Let's dive into the other side of the story because a little caution never hurt anyone. And remember, this isn't financial advice, just a deep dive into what could go wrong. Always do your own research. Will Bitcoin crash in 2025? Key risks you need to know. The US Bitcoin Reserve Plan falls apart. One of the biggest catalysts for Bitcoin's recent rally has been the promise of a US Strategic Bitcoin Reserve, SBR, a plan championed by President-elect Trump. If it goes through, the US would purchase 1 million BTC over 5 years, locking it away for at least 2 decades, except in the case of debt repayment. Sounds great, right? Government endorsement, institutional confidence, to the moon. Not so fast. First, setting up an SBR isn't as simple as a presidential promise. Even with more pro-Bitcoin politicians entering the scene, regulatory hurdles and resistance in Congress could prevent the plan from becoming reality. And let's not forget the skepticism from key figures in finance. Federal Reserve Chairman Jerome Powell himself dismissed the idea, stating that the central bank legally cannot own BTC. That statement alone sent Bitcoin's price tumbling from a high of $118,000. If the reserve plan is scrapped, Bitcoin's price could take another hit, as the expected government support disappears. Institutional investors may also hesitate, slowing the very adoption that has driven BTC's recent rally. And ironically, even if the reserve does get approved, it might not be all sunshine and rainbows. Some argue that a US Bitcoin reserve could signal a loss of faith in the dollar, creating financial instability. As one analyst put it, the dollar isn't dying, it's actually thriving. The US economy is growing while Europe is stagnating and China is in crisis. So, whether the reserve happens or not, Bitcoin could face serious volatility either way. Governments dumping their Bitcoin stash. If these governments decide to dump their BTC holdings, the market could experience a massive liquidity shock, driving prices down at an alarming rate. A coordinated or unexpected sell-off from multiple nations could not only create panic among investors, but also erode the confidence of institutional buyers who were previously bullish on Bitcoin's stability. China, in particular, could use Bitcoin as an economic weapon, strategically selling its reserves to disrupt US financial markets while simultaneously strengthening its own digital yuan initiative. Meanwhile, if the UK liquidates its holdings, it could signal a shift in governmental attitudes toward crypto, potentially influencing other European nations to do the same. The sheer volume of BTC hitting exchanges could overwhelm buyer demand, leading to a steep correction in price, possibly triggering margin calls and liquidation cascades across major trading platforms. At the same time, such a drastic move could raise alarms among institutional investors, causing them to reevaluate Bitcoin's reliability as a long-term store of value. On the flip side, a massive sell-off might pave the way for new power players, large corporations, private investment firms, or even rival governments looking to accumulate BTC at a bargain price. Despite the short-term chaos, Bitcoin's global adoption and long-term scarcity could mean that, after the dust settles, its value may rebound stronger than ever, much like it has in past downturns. Big corporations forced to sell their BTC. If such a scenario unfolds, Bitcoin's price could face extreme volatility, as the sudden influx of BTC into the market would likely overwhelm buying demand. The perception of institutional weakness in the crypto space might also drive retail investors to panic, further exacerbating sell-offs. Additionally, if Bitcoin's price drops significantly, it could strain leveraged positions, leading to cascading liquidations across exchanges. This could trigger a broader market downturn, impacting not only Bitcoin but also other cryptocurrencies, as sentiment turns bearish. On the other hand, large institutional players, hedge funds, or even nation-states looking to bolster digital asset reserves might step in to absorb the excess supply, seeing the dip as a strategic accumulation opportunity. Furthermore, regulatory bodies might use the sell-off as an excuse to push for stricter oversight, adding another layer of uncertainty to the market. Despite the turbulence, Bitcoin's history of bouncing back stronger after major dips suggests that while short-term pain is possible, long-term adoption and institutional confidence may ultimately prevail. The return of Satoshi Nakamoto. If Satoshi Nakamoto were to re-emerge and start moving Bitcoin, the market reaction would be nothing short of chaos. Given that 1 million BTC represents nearly 5% of the total supply, any sign of liquidation could trigger mass panic among investors, fearing an imminent price crash. The mystery surrounding Satoshi has always been part of Bitcoin's allure. His return could shake the foundation of the crypto industry, raising questions about control, decentralization, and trust. Regulators worldwide would jump at the chance to tighten their grip on Bitcoin, potentially introducing new restrictions or investigations into its origins. On the other hand, Satoshi's return might not be all bad. It could provide much-needed insight into Bitcoin's future direction, resolving long-debated questions about its purpose, vision, and the true identity of its creator. But let's be real. If those wallets suddenly come to life, the crypto world is going to be in full meltdown mode. Inflation forces the Fed to raise interest rates. If inflation surges in 2025, the Federal Reserve could be left with no choice but to aggressively hike interest rates, which would directly impact Bitcoin and the broader financial markets. Higher interest rates make traditional assets like bonds and savings accounts more appealing, reducing the incentive for investors to hold riskier assets like Bitcoin. Trump's proposed tariffs on Chinese imports could further fuel inflation by making goods more expensive, while mass deportations could shrink the labor force, forcing businesses to raise wages and pass costs on to consumers. In addition, global supply chain disruptions, whether due to geopolitical conflicts, natural disasters, or energy shortages, could exacerbate the problem, driving up commodity prices and increasing the cost of living. If inflation spirals out of control, investors may seek refuge in traditional safe haven assets like gold and US Treasuries, leaving Bitcoin in a highly volatile position. While Bitcoin is often called digital gold, history shows that during periods of economic uncertainty and market downturns, it behaves more like a speculative asset, leading to potential sell-offs and increased volatility in the crypto market. Why Bitcoin will still crush it in 2025? Bitcoin has proven time and time again that it thrives in cycles, overcoming adversity and reaching new heights. With clearer regulations on the horizon, institutional investors who were previously hesitant may finally dive in, bringing billions in fresh capital into the market. The post-halving effect has historically fueled explosive growth, as reduced supply meets increasing demand, driving Bitcoin's price higher. The approval and expansion of spot Bitcoin ETFs have already made BTC more accessible to traditional investors, and with altcoin ETFs on the way, liquidity in the crypto space is only set to increase. Meanwhile, the growing global adoption of Bitcoin as a legitimate store of value, especially in economies facing inflation and unstable fiat currencies, could further cement its role as digital gold. Additionally, corporate and nation-state adoption is accelerating, with some countries exploring the idea of holding Bitcoin as a strategic reserve asset. While volatility and risks remain, Bitcoin's ability to rebound stronger after every setback suggests that 2025 could be another record-breaking year for the world's largest cryptocurrency, possibly pushing it into mainstream financial dominance. That's all for today's video. If you found this deep dive into Bitcoin's future as thrilling as a last-minute bull run, smash that like button to keep the momentum going. Don't forget to subscribe for more mind-blowing crypto insights, and hit that notification bell so you never miss a beat. Got thoughts on Bitcoin's 2025 fate? Drop a comment below. Let's get the debate rolling. And remember, in the world of crypto, fortune favors the well-informed.